What's happening all? It is Tuesday the 9th. Sorry, I couldn't get a message out on Friday of last week. I was in Birmingham, Alabama. I was speaking at an event. Pretty cool time. I mean, it wasn't a real big one as far as the attendance, but the attendees were really awesome. Had a great time connecting and reconnecting with a lot of people I haven't talked with in a long time, because it's amazing how the pandemic really just screwed up the communication that we had with folks. There's a lot of people that I was connected with that was all on a more or less a face-to-face basis because of the travel that I was doing. And then because travel was inhibited the way that it was, our communication kind of halted, which kind of sucks. But you see them face-to-face is like seeing somebody for the first time since forever, right? And then just jumped right back into the where we were when we left off, and just a lot of cool things happened as a result of that event. So because of it and the time difference and all that, and it was pre-change as far as the daylight savings time, so I was 3 hours difference, just threw things off quite a bit. It was a really great trip. I enjoyed getting back on the road, but at the same time, man, being on the road still reminds me of how tough it was when I was doing that before. But give you some updates on things. We've got the global housing price index report came out through the Dallas Fed, and that's showing that home prices were up 10.6% globally, right? And that they cite that a revision to the long-term trend line would imply some sort of, and they're claiming there should be some 13% correction in housing. There's contrasting ideas on that, right? They're thinking it may, when you look at what's happening in the market, maybe some areas might experience that, right? We're seeing some areas being affected by what's going on in the area. But for the most part, nationally, I think we're going to be in pretty damn good shape. At least that's the consensus. We're also looking at bonds themselves. Yeah, they did pretty good while I was out of town. Let's take a look at that real quick. I was surprised at how well they did. And when you start seeing what the 2% did, I mean, when I left last week, it was just coming off the bottom, and then it just did a run, and it's in really good shape, coming back probably about midway. And I don't know if this is a retracement or if this is actually a new trend line. It looks to me like a new trend line, but there's some risk here. If we keep hitting this right here, we keep bouncing off of this particular ceiling, we may not be able to break through it. That could turn bearish on us and head right back down. So there is some risk associated with where we are. That's on the 2%, which is, your owner occupied stuff. Looking at the market, for at least where the bonds where we get for investment housing, again, we're not breaking above the trend lines. So that being the situation, we may be stuck in a channel coming right off the bottom. I'm not thinking we're going to get a ton worse, but I'm not sure how much better we're going to get. So with that, I keep telling folks and say, if you're ready to lock, just lock, right? I mean, it's trying to play the market and hope the market gets better. That's hard to play out. It's hard to play out even when you know what's going on, because there's so much crazy stuff going on in the market. Inflation numbers came out, the consumer price index report showing that we're probably, if things pencil out the way that's anticipated, should be getting closer to 5.8% with the CPI. So that's interesting to see. It continues to increase, even when you're talking about what the Fed is looking at and how they're making numbers work for their index. The PPI, the producer price index, is also pretty interesting to watch when you've got the wholesale inflation, meaning what it is to produce items. That's going up to about 8.7%. That's significant. So when you start looking at, again, start baking in everything that it should be baked into those things, we might see an even hotter number that's going to impact the long-term value of the dollar, and that long-term value of the dollar we know is going down. Therefore, when you lock in your costs, 30-year fixed loan, you're benefiting. So always look at that, consider that. Don't get so freaked out about what interest rates are doing. They will go up. There is a lot of taper conversation with respect to what the Fed's talking. So don't let that concern you. Look at the deals. We may have more inventory come in, hard to say. I truly believe we will, with Zillow doing what they did recently. Possibly bigger organizations or similar sized organizations might follow the same thought process. And if that happens, that's going to open up inventory for you, the real estate investor, which is the big problem we have right now. So don't create a new problem with worrying about the rates. Focus on being able to get that inventory, focus on the deal, focus on your baselines, make sure it makes sense for your acquisition. Talk to us. We'll guide you through the lending process. You don't have to go into it blind, and we will lead you from where you start to where you end to have a successful portfolio and successful real estate investment business. Talk again on Friday.